taking a look at non-farm payrolls, we always, look at a variety of leading indicators for non-farm payrolls, and they range from anything from the ISM numbers to confidence to whatnot. And you're going to hear some hesitation in my voice right now because I'm watching the markets. I'm in a whole bunch of live trades for our BK members, and so that's obviously our top priority, which is the trading the trades that we have on for our members. But anyway, non-farm payrolls, let's start with the projections. First of all, market is looking for decent job growth, 175,000 versus 178,000, which is really not too much of a change. On top of that, they're looking for wage growth to rebound quite a bit. Sorry, I need to see where yields are right now. They slow down a lot. They need to see wage growth. They want to see wage growth rebound quite a bit because the previous month wage growth was very weak at minus 0.1%, and they're looking for unemployment rate to tick up. So, all of these are, for the most part, except for the unemployment rate, which is expected to tick up because labor force participation is likely to be increased. We're basically looking forward to an overall stronger report. But the leading indicators do not show that. Even today, we had Challenger Gray and Christmas report a 42% rise in job losses, which is the largest month of increase in job losses since September. Also looking at ADP. ADP also fell quite a bit, and so ADP fell quite a bit from 215,000 to 153,000. This is the weakest level that we've seen ADP in 2 months, so it's actually not so bad. Jobless claims was the primary good news, where jobless claims actually increased. Improved from 263,000 to 235,000. Sorry, once again, we're in a live dollar yen trade, so I'm going to want to kind of watch this, see if we make it through to 115. We got our targets at 115.25. Yields are down quite a bit, but I'm not too sure this, we're going to London close. Either means we're going to have a big flush or we're going to have some reversals. So I think I'm just going to, for our members, I'm just going to bank our 20 pips when we get it here. And then ISM non-manufacturing index, that was very, very good. But if you look at the details of the report, which I'll pull up just a minute. Sorry, once again, in these live trades that, all right, we're coming down here. I've got my TP at 25. Let's see if we get it. I think I'm just going to close it at plus 26, 27. All right, I'm out of the trade. Sorry. Once again, yeah, Thursdays always seem to be a very busy day when we have these webinars, and our top priority, as I said, is trading for our members. Okay, so I'm out of that trade, so you have more of my focus, although I'm still watching for new trading opportunities. So anyway, the employment component of non-manufacturing ISM dropped to 53.8, which is a pretty steep decline, 4.4 points. So a pretty hefty drop here that suggests we may very well have a weaker non-farm payrolls report, because the employment component non-manufacturing ISM tends to have the strongest leading indicator for NFPs. Aside from that, we also look at some other readings, which I'll bring up in just a second. We also look at confidence measures, the University of Michigan Consumer Sentiment Index. Let's just get all the data on the table here. And then we're going to sort by alphabetical order. The Consumer Confidence Index was very strong. Obviously, the Trump stimulus drove consumer confidence very high. That was actually the strongest consumer confidence reading since 2001. And then we also look at the UMich survey. UMich sentiment index, no surprise, also huge rise, 12-year high in UMich, all thanks to the promise of his Trump stimulus program, which seems to be what everyone is focusing on these days, rightfully or not. And then we have the non-manufacturing ISM report. And that employment component actually increased. So manufacturing sector actually saw stronger job growth. And then we're going to look at our weekly jobless claims, the historical stats. And what you'll see is that 4-week average jobless claims are low, but if you compare them to either the first week of December or the last week of November, depending on how you look at it, we're actually up in 4-week jobless claims, and the continuing claims are higher. So pretty much everything except for the confidence numbers and the ISM non-manufacturing numbers points to a weaker non-farm payrolls report. So obviously that's quite concerning and something that we are watching very closely.